I do worry tremendously about Europe. The increase in costs, particularly in electricity generation, is going to send millions deeper into poverty or into poverty. If not, they're already there. We're going to start to see European companies shut off production if natural gas flows start to trickle down. They've already said that. How worried are you about the global economy and the American economy?
Yeah, there's a lot to be worried about. And I mean, if you zoom out, what markets have had to digest over the last 5-6 weeks is pretty unfathomable. And I think it's just left markets schizophrenic. So let's first talk about the global economy. You know, we're facing inverted yield curves. Everybody is citing the statistical probability of a recession, given what's happening in the 210s. We can get lost and caught in all sorts of technicalities. What matters is the following. We are entering a growth slowdown regime for sure, right? It's inevitable. And it's an inevitable aftermath of, what is it, almost $10 trillion that were pumped into the economy on the back of COVID. And how worried do we need to be? I mean, if you look back, you know, when 210 started to invert in the past, you would see that a recession would take place around 6 to 24 months after that. This time round, you know, let's forget that this time is different rhetoric. Let's just zoom in into what's happening right now. And what's happening right now is that rates are, you know, yields are actually negative. Real yields are negative prior to this point. Normally, yields are positive as they enter into a recessionary environment. Yeah. We're almost 5 percentage points negative. That's different. You know, the other thing is different is look at the power of the employment market, at the labor market. And I mean, the other thing is, which I think is the most fascinating, we are totally turbocharged. Usually, you see this environment start to take place around 2 years after the first rate hike. We're about 2 to 3 weeks afterwards.
So what do we do? With all that in mind, Annika, is it just put all of our money in cash or gold and let it ride? I mean, if you're out there watching, you're up early, or maybe you're in Europe or in Asia right now, because we go around the world, and you are agreeing with you, what's the move?
Well, what's the move is such a challenging question. And the reason it's such a challenging question, you know, hiding in cash is a very painful trade, looking at the rate of inflation. And I think we've all been very humbled, including the central bankers, of course, that trying to predict inflation is missionary impossible because we're entering a sort of inflationary discovery environment. And I think the only lesson we've learned, looking at the structural issues around supply chains, you know, the Russian war is the tip of the iceberg there, is that inflationary forces are far more structural than we thought. So, you know, to that point, cash is rather painful. You know, the equities market, and this is what I think is fascinating. This is the schizophrenia again. We are in a war environment. We are all talking about the you know, 90% probability of a recession taking place. Yet equity markets are very, very strong. Yes, Q1 was weak, but I mean, US equity markets are a few percentage points off their all-time highs.